Yeah, so basically, Bitcoin, for the most part in its history, has behaved like a risk-on asset. And so when there's liquidity in the system, when stocks are doing well, generally Bitcoin is doing even better. Now, because it's a smaller asset and because it's only a 12-year-old asset, it's been heavily correlated to its own adoption cycle, right? So kind of like how, say in its early days, Google could be immune to the economic cycle because no matter what the economy was doing, Google was growing its market share. And still is in large part. And so Bitcoin's been like that for a while, where Bitcoin's growing, but the price can obviously fluctuate substantially based on if there's a liquidity event, right? So if the dollar spikes, if liquidity gets tight, Bitcoin is likely to sell off. On the other hand, if liquidity is very abundant, then Bitcoin can do very well. And of course, when Bitcoin is doing well, people want to go out on the risk curve and buy silly coins, and those kind of temporarily outperform Bitcoin. But then when the music stops and there's less liquidity and everything kind of corrects, those things go down a lot more and tend not to hold their value over multiple cycles. And so basically, Bitcoin's benefiting from the long-term adoption cycle while still being generally a risk-on, liquidity-driven asset that is prone to sell-offs when it's not going in this direction. Another thing that I think is really kind of understated over the past few months is how important Grayscale has been for Bitcoin's price action in the tactical sense. And so, for example, the second half of last year, Grayscale was by far the biggest buyer of Bitcoin. And so some of that was natural demand, but another part of it was that arbitrage trade, right? So Grayscale had a premium over NAV, and investors could, they could buy that, they could buy in at NAV, so they could create new units of it, and then they could short Bitcoin elsewhere. And so basically that served as this program that kind of kept converting liquid Bitcoins into illiquid Bitcoins. And so even when that trade ended every 6 months, those Bitcoin would stay in there and just be permanently illiquid now. And then traders could go and do it again and put another batch of Bitcoin in there. But because we've had a rise in competition, right? So we have a Canadian Bitcoin ETF, we have other ways to access Bitcoin. Exchanges have gotten more and more usable. We have all sorts of ways to access Bitcoin now for institutions and individuals. So that Grayscale Bitcoin Trust went to having a discount to NAV, and so that kind of closed that very aggressive kind of neutral risk-free arbitrage trade. And so Grayscale's no longer been a buyer of Bitcoin like they were, and so essentially the biggest buyer went away. As we started to see Bitcoin consolidating and kind of not really making higher highs, and then when you get the Elon FUD, when you get all the other FUD, now we have kind of China hash rate moving around, and so we're seeing kind of a period of Bitcoin weakness. And I think in some ways this was due, given how much euphoria there was in things like Dogecoin, things like Ethereum Classic, or things like like basically every token under the sun was having this crazy vertical price action in 2021. And so now reality is kind of setting in. Some of these tokens are crashing. Bitcoin, that actually has the fundamentals, is correcting, but it's holding up better than those meme tokens and things like that. And so overall, I don't have a firm, say, 3 to 6 month outlook. I'm kind of watching certain risk levels, right? So I was kind of watching to see if it breaks. We started to have some rising action in recent weeks. So I was trying to see if it would break over, say, 41, 42,000. So far, it's kind of gone the other direction, kind of settled in the lower 30s for now. And so I don't have kind of a near-term price action, but overall, what I'm doing is kind of watching the fundamentals of the space. So watching development continue to happen on the Lightning Network, watching what's happening with, say, El Salvador, watching what's happening with some of the layer 3 now stuff that's out, watching what's happening with this Bitcoin mining migration that's potentially underway here. And so I think it's a kind of a time to focus on the fundamentals and make sure they remain favorable. Whereas the price action, I think, has it definitely has to start it has to start proving itself to the upside in order to kind of regain that momentum. Right now, it's kind of in that big consolidatory phase.
I think one of the really interesting points that your Grayscale point kind of reifies is how much we're either learning or being reminded, depending on who you are, that things that we attribute largely to narrative are actually more about market structure on both the way up and the way down. Where big run-ups come from in our brains is, well, it's institutions buying, spot, but that's not actually it. It's these specific trades like you mentioned. Same way on the way down when something, when I think the second round of the 18 China FUDs that we've had this year or whatever happened, and we dropped from like 41 to 32, to listen to people who are at trading desks and on exchanges and things like that talk about it. No one actually wanted to sell much below 39 or 40. It's just they were liquidated, right? And so this move that was meaningful but not devastating became a 30% move instead of a 7% move. And I think it's an important reminder, I think, to not get too euphoric on the way up or too depressed on the way down. Speaking of the sort of El Salvador and Lightning Network, I know this is something you've been paying attention to. One, I would love your kind of impressions about El Salvador and what that might mean for Bitcoin. But then two, I'd love to get your take on how it could be or whether it will be a force for really putting some momentum and excitement back in kind of Lightning Network development, which is something that's been comparatively quiet to some other parts or aspects of the industry over the last year.
Yeah, I think overall it's good news, right? So, basically, we've had the whole story of expensive remittances to El Salvador, a country that's very reliant on remittances. And so anything that can lower that cost is helpful. And anything that can give people, banking when they don't have banking. And so there's still challenges there to get more people smartphones, for example, because the population is underbanked, but also underpenetrated in terms of smartphones. But potentially smartphones are a quicker thing to fix than banking issues, right? So if you get more people smartphoned up, they can access things like a Lightning wallet. They can now have kind of basic banking services. And so overall, I think that's a good thing. And by making it legal tender, it decreases the friction for things that they can do. When they get the Bitcoin, and they don't have to rely on stable coins as much. If they can interface the banking system with that in a better way, that can be a smoother process for them. And so it kind of enables that technology. I also think that the potential for El Salvador looking into Bitcoin mining as a revenue source is interesting, right? So that's part of that diversifies hash rate. If they can make it work financially, then that's good. That's good for them. I think at the same time, Bitcoiners should be careful about hero worship and always kind of wanting the next narrative, right? So I think they learned that lesson with Elon Musk, where they were super happy when Elon, finally bought into Bitcoin, but then it turned out his narrative was kind of all over the place. He might have been pressured by outside entities or his board or whatever the case may be about, say, some of the ESG narratives around it. And so, he kind of backpedaled on Tesla's support for Bitcoin. He was out there pumping Dogecoin and other kind of meme coins. And so they kind of, I think, regretted some of the status they gave him in the space. And so I think people have to, think the same way that when they're giving, the president of El Salvador that kind of same treatment, where you have to realize that El Salvador is still a very troubled country. There's questions about the way that they run the government, to put it lightly. And so I think people have to be careful about, say, you can recognize a good thing, but you don't want to get into the next trap of always kind of feeling like you're relying on one person to kind of drive the Bitcoin narrative. I do think overall, I think one of the stories of the Bitcoin conference, followed up by this El Salvador news, is that Lightning is starting to reach critical mass. And so, if you kind of look back in history there, I mean, it started, it hasn't exploded the same way that, say, DeFi has on Ethereum, right? Because it's inherently different purpose. Lightning doesn't have that inbuilt incentive for using it as like a gamified token, casino, right? So it's basically this slower, more structural build out. And so it started as a white paper in 2015. Then they had to do some standards, right? So that different companies could start kind of implementing Lightning that were interoperable. And then with the SegWit update, they could start actually building Lightning on top of Bitcoin. But there, the limitation with Lightning is that it's all reliant on liquidity. And so if there's only a handful of nodes, it's not a broadcast network, it's like a channel network. And so that took a long time to build out, both the tools to allow that to be easier and for just more and more people to use it, more and more kind of channels and nodes on the network. And so we've really kind of reached critical mass starting late 2020, where it's a pretty usable network for small transactions, and it's kind of sufficiently liquid now. And so we're starting to see kind of the killer apps come that are actually kind of putting that network to use and starting to use that technology. And so it's one of those things where, it can happen slowly and then all at once, where you had a couple years of really building it out ever since it's been possible. But I think, now I think we're in a more exponential growth phase, most likely, where the apps and the users are really starting to onboard on that. So exchanges starting to use Lightning because it's cheaper, and we're also seeing that it can be used for places like El Salvador and remittances. It can be used in, for example, games that are streaming Lightning, streaming sats, based on rewards in the game. I think that's kind of one of the takeaways of that conference overall is that Lightning is now, pretty well developed. There's still a lot to go, but it has come pretty far, and it's really a usable network now.